to My Money Karma's Master Your Finances Resolution, a series of 30-day challenges that are structured to guide you through the simple 5-minute tasks you need to take off each day to successfully master your finances. Each day, we'll explain a task you can finish in less than 5 minutes. At the end of 30 days, you are guaranteed to have mastered your credit. Day 1. Do you really need a credit score? A credit score is now an important part of various aspects of our financial lives. To truly master your credit in a targeted and intelligent way, you need to identify that aspect of your financial life where your credit score will become most useful, influential, and relevant. Your 5-minute task on day 1 is simply to trace your personal circumstances through this flowchart. If you successfully complete this task, you will be able to answer 2 important questions. 1. Do you really need a credit score? And 2. Given your financial goals, where does your credit score make the most difference? Yesterday, you answered whether you really need a credit score and which part of your life it plays the most immediate and important role in. So today's task is simple. Sign up for your free credit score. All you need to do to check your score is sign up on our website. Once you enter a few simple details to log in, you get immediate access to your credit score and detailed credit report. But first, what is a credit score? Quite simply, your credit score shows how well you deal with credit, be it in the form of credit cards or loans, based on which lenders decide whether you qualify for further loans. Needless to say, it is important to keep track of your score to keep it healthy, so that you can meet your credit needs without any hassles. The score is a 3-digit number, generally between 300 and 900. However, there are a number of different credit bureaus with different ranges, and in our case, it goes from 300 to 850. Just follow the link in the description to get started right away.
Your task is to analyze different parts that go into your credit analysis. Once you log into our website, you can find the link to these factors right below where your credit score is displayed. They are credit card utilization, payment history, negative status accounts, age of credit history, credit inquiries, and total accounts. Here, you also have the option to learn about each one of them in detail. Credit card utilization looks into whether you're spending responsibly with your credit card. Your payment history is tracked to make sure you're not delaying or avoiding any loan EMIs or credit card bills. Negative status accounts turn up on your reports when you default badly on a loan. Avoid this at any cost. Age of credit history shows how experienced you are with credit to gain trust of lenders. Credit inquiries reflect when a lender pulls your credit report to check your profile to process a loan or credit card application. These credit pulls, called hard inquiries, can cost you a few points, as opposed to checking your score on our website, which is a soft inquiry. And finally, total accounts, which gives you an overview of all credit lines you have. Today, on day 4, your simple 5-minute task is to identify any errors in your credit report. Mistakes are usually of 2 types: identity errors and account errors. In identity errors, your personal information might be incorrectly reported, or you might be confused with somebody else. So ensure you check all your personal information and match them with your official documentation. Account errors, on the other hand, have bigger impact on your score. Open accounts might be shown as closed, dates might not match your record, or there might be delinquency remarks despite timely payments. Your credit limit or current balance might be incorrect. Finally, there might be unknown accounts or transactions in your name. Check all of these thoroughly. If you spot something you don't recognize or suspect to be an error, use the option to report errors, and you will be guided through a very simple process of raising a dispute with your credit bureau. So far, you have understood your specific need for a credit score, signed up for a free report, analyzed the factors influencing your score, and identified any potential mistakes to raise a dispute. Today, on day 5, your 5-minute task is simply to identify how urgent and important your credit score is. This is based on your particular financial goals and specific need for a credit score. For instance, a credit check by your employer is urgent but not relatively important. On the other hand, a credit check by a prospective bank or lending institution is both urgent as well as highly important. Similarly, a credit check by credit card companies evaluating your credit limit is important, but not particularly urgent. Which quadrant do you fall under? This will determine how quickly and proactively you take steps to address your credit. Today on day 6, we'll take this abstract score and help you translate it into what it means in concrete money. Specifically, if you are to apply for a loan or mortgage, today's task will help you understand how much your credit score is costing you in extra interest payments. If you have a perfect score of 800, banks will offer you attractive interest rates. But for every 10 points you lose on your credit score, your interest rate rises, costing you lakhs in extra payments over the course of your loan. So identify the point of this graph where your credit score falls and see how much a credit score improvement is worth to you financially. That's all for day 6. So today, on day 7, we begin fixing this damage with a task that should take you less than 30 seconds. Set a target for your credit score, for the short term and the long term. Follow through on our 30-day challenge and we will make sure you meet both of these targets and master your credit. Yesterday, you took the all-important step of setting your credit score goal. Today, on day 8, set up an automated reminder to check your credit score again each month. Research has shown that consumers who check their score frequently report much higher improvements without doing anything else. But with My Money Karma's 30-day challenge, you'll be doing a lot more. So set that alarm for this time next month and see how your score increases in real time. Today's task is simple. Choose one credit card of yours and pay off the current outstanding balance in full. It doesn't matter when the bill is due. Pay it off now. Banks make it easy for you to make timely payments by offering monthly minimum payments. But at the cost of this easy route, you pay a hefty interest on your outstanding balance. Paying off a bill now in full not only sets a good habit for yourself to clear debt and save money on interest every single month, it sends a positive signal for your credit score. What's more, research shows the psychological benefits of paying off debt are huge. This simple act will set up a virtuous cycle. So, join us for day 10 of My Money Karma's 30-day challenge to master your credit. Yesterday, you took the first step towards setting up a responsible financial behavior. Today, on day 10, let's take the advantage of this. Research the best credit card with zero fees and start your application process for one. Your number of credit lines and accounts plays a big part in your credit score. If you have many accounts and different types of credit, all with excellent payment history, your credit score rises substantially. This is because lenders know you have a varied track record of a reliable and responsible borrower. This makes it easier for you to get additional lines of credit, which further increases your creditworthiness, so on and so forth. You're on your way to setting up a virtuous cycle to master your credit. Join us tomorrow for day 11 of My Money Karma's 30-day challenge to keep the momentum going. Yesterday, you explored the role of extending your lines of credit and established a varied credit history. In the process, you would have noticed that not all types of credit are created equal. Secured loans like mortgages and home loans have relatively lower interest rates. Unsecured term loans like personal loans have higher interest rates. Revolving loans like your credit cards have the highest interest rates, as high as 42% per year if you don't clear your outstanding balances. So today's task is to become aware of the interest rates on all your lines of credit. Keep a note of these different rates, and we'll begin to address the massive savings you can make on these starting tomorrow on day 12 of My Money Karma's 30-day challenge to master your credit. Over the past 3 days, you have noticed how your lines of credit vary in nature and interest rates and how they play an important role in your credit score. Today, we'll start to consolidate your understanding and your financial habits. Pick any 2 of your monthly bills and pay them off right away without waiting for the bills. Bonus points for using a credit card to make these payments. When extending lines of credit, the key mistake people make is losing track of various payments. Phone bills, utility bills, credit card bills, EMIs on retail purchases, and various loan repayments all add up. So we will start addressing the good financial habits needed to start consolidating your payment behavior to stay on top of your bills and give a massive boost to your credit score. For this and more, join us tomorrow for day 13 of My Money Karma's 30-day challenge to master your credit.
In the last few days, we've started addressing your purchase behavior and the impact of spending on your credit score. Today's simple task is to set a weekly purchase limit on your credit card. All you have to do is access your account, select your card, and choose a limit. Try and keep this under 30% of your total monthly limit. There are 3 big benefits to today's task. First, users with a weekly limit are 5 times more likely to stay within their monthly limit, even though they are free to remove their self-imposed limits. Second, a weekly limit regularizes your monthly outflow and makes your budgeting far more predictable. Over time, you end up spending far less. Third, it ensures you stick to your payment schedules and therefore has a positive impact on your credit score. These put you on the front foot to start planning out more advanced lines of credit, which we will start planning tomorrow. So join us for day 14 of My Money Karma's 30-day challenge to master your credit. Over the last few days, we have focused on bringing your spending and use of revolving credit under control. Today's task involves looking into the future and planning your credit requirements rather than your expenses in the past. Some types of debt are not plannable. For instance, a medical emergency or a business opportunity. But most instances of debt are knowable and plannable. Will you be getting an advanced college degree? Buying a home? Getting married? Large financial decisions like these are the primary causes of debt. Go through the resources in the links provided below and see which of these situations might apply to you. It pays to have an idea of your credit requirements well in advance so we can plan your credit score strategy accordingly. Don't forget to join us tomorrow for day 15 of My Money Karma's 30-day challenge to master your credit. In the last few days, you've taken the all-important step of planning your lending requirements and setting a credit score target to hit. At this stage, you run the same risk that defeats more than half of all New Year resolutions. Expecting immediate results, getting frustrated, and dropping out. How long your credit score takes to react to your good habits and go up to your target level depends on your starting point. For instance, in the worst case scenario of having gone bankrupt, it might take more than 5 years for your credit score to go up. For most of you, this extreme situation is not the case. But even then, simple mistakes can cause your credit score to take longer to recover. A missed payment could stay on your report for 18 months. A late mortgage payment could take up to 9 months. Maxing out on your credit card account could take 3 months to clear. So today's task is to account for this year to be about constant continuous progress towards your credit score target. If your improvement target is large, say over 50 points, break it up into quarterly objectives. And remember that the better your credit is, the faster it will improve. So aim for slower improvements in the beginning. Over the course of these first 30 days of the year, we will set up your entire annual calendar through simple recurring tasks and habit-forming activities. So join us tomorrow for day 16. Today's task is especially important if you're looking for immediate steps to build credit or recover after a setback. Normally, under such conditions, your credit score puts you in a kind of paradoxical situation. You need credit to build or improve your credit score, but lenders look at your credit score to give you credit. This is where secured credit cards come in. Enquire with your bank about the secured credit cards they offer. These are cards that usually work by extending credit based on a cash deposit you make as collateral, or by charging you monthly EMIs and increasing your credit limit as you successively pay off EMIs. Even though these are secured credit lines, your record of paying off these bills will go into your credit report and help you increase the positive signals contained in it. Join us tomorrow as we explore expert credit card techniques further on day 17 of My Money Karma's 30-day challenge. The last few days, we have focused on how useful it can be to take advantage of credit card facilities to build or improve your credit quickly. Today's task is an exercise in learning to use this power responsibly. Calculate your credit utilization ratio. That is, pick one of your credit cards, find the outstanding balance on it, and then divide it by the credit limit on this card. So in this case, your credit utilization is 20%. Now do it for all your cards and find your total credit utilization. If this is high, credit bureaus get a signal that you are overextending yourself and might find it difficult to make the payments. So try and keep your total credit utilization ratio at around 30%. The simplest way to do this is to spread your payments around your different cards instead of just using one card till you max out your limit. If you have just the one card, don't worry. We've got you covered tomorrow on day 18 of My Money Karma's 30-day challenge. Yesterday, we introduced the concept of the credit utilization ratio and explained how you can use a rebalancing among your various credit cards to optimize this number and increase your credit score. But what if you have just the one credit card? Today's task will help you with this. Credit bureaus only take this ratio into account once every 30 days at the end of your billing cycle. What does this mean? If you make 2 payments in a month towards your credit card outstanding balance, then you can spend much more than 30% of your credit limit and still show a very low credit utilization ratio by timing your payments. Let's do that today. Is your credit utilization today greater than 30%? Ignore your billing cycle and calculate the payment you need to make to bring your credit utilization ratio below 30%. Make that payment now. Tomorrow, we'll take this one step further by addressing the credit limit itself on day 19 of My Money Karma's 30-day challenge. The last 2 days, we've looked at short-term fixes to address your credit utilization, an important parameter in your overall credit score calculation. Today, we'll address a more long-term fix. When your credit limit goes up, your credit utilization automatically goes down, despite no changes in your spending habits or outstanding balance. The good news is that if you've been paying your bills on time, then you can simply check with your bank whether they will increase your limit. Most banks themselves offer an annual increase, and a basic inquiry should be enough to get you started. If not, giving banks a little more information might help. For instance, any increase in income that you might have had since you last got your credit card, maybe a new job or a salary hike. Similarly, if your liabilities and obligations have gone down since your credit card application, this can also count towards a higher limit. If none of this works, come back tomorrow for more ideas on how to increase your limit. Yesterday, we explained the simplest and fastest way to increase your credit card limits. If none of these have worked, then your task is a little more time consuming, but can end up being far more lucrative. Look up the best credit cards across the top banks and inquire about an application. When you mention your existing credit card and your requirement for a larger limit, credit card providers will likely try to oblige in order to get you to move more of your payments over to their platform. You may be able to negotiate not only a larger limit, but also better perks like reward points, lounge access, and cashbacks. However, make sure that you also continue to keep your existing credit cards. Closing them will be bad for your credit score. So even if you don't plan to make any purchases, keep your balances clear and your credit account open. Tomorrow we'll explain how this will come in handy when you move on to larger credit score items like your loan payments. Today we round out the middle portion of this 30-day challenge that has been focused on the power of credit cards to improve your credit score, and also set you up with great financial habits that can be used to improve other parts of your credit. If you've been completing the tasks so far, you likely have a much better idea about how unsecured credit cards, increased credit limits, and low credit utilization ratios can all improve your score. So today's task is to close that loop and make sure these credit lines don't get away from you. Set up an automatic payment for your credit card. Remember to make sure you select the option to clear your entire outstanding balance and not just the minimum due. Now it's all about cycles of bills getting paid automatically and building up your credit history with a strong record of handling credit and paying bills like clockwork. This is already one of the strongest signals you can send to banks about your credit worthiness. So good luck with today's task. And starting tomorrow, we'll start addressing those parts of your credit score that carry the most financial weight: debt. Did you know that an overwhelming majority of people who check their credit scores do so because they are actively looking for a loan? By this time, it is often too late because your credit history builds up whether you check it or not. But it gets worse. When prospective borrowers get their credit checked by potential lenders, it is called a hard inquiry, and this very act of checking will become a part of your credit history. That means the next lender is able to see that your credit has been checked, and this may be a negative signal that you're desperate for funds. Today's task then is to understand the importance of a soft inquiry. This is when you pull your report from services like mymoneykarma to check, analyze, and understand your credit history. This soft inquiry does not show up on your credit report, and therefore has no negative impact on either your credit score or your chances of getting a loan. Join us tomorrow as we continue to address the top tips and hacks for the debt portion of your credit. The two biggest reasons for a low credit score are loan defaults, which have a huge impact but happen infrequently, and missed loan repayments, which have a high impact and happen more frequently. So today, let's analyze your credit profile and forecast your risk of even coming close to one of these worst case scenarios. Do a simple EMI health check. Take your monthly payment, divide it by your monthly income. Is this between 35 to 45%? If it isn't, you might need to take some steps to bring this in line. Why? The golden rule of personal finance is the 50-30-20 rule, where on average it is found that people need 50% of their income for basic necessities, 30% is for discretionary spending, and the remaining 20% is available for savings and investments. So setting aside the 50% of your income that goes towards necessities, the very upper limit of your income that can be funneled toward EMI payments is 50%. We recommend a 10% buffer because if you have any sudden spending requirements, they shouldn't come at the expense of a missed EMI payment. Is your EMI to income ratio higher than 40%? Keep in mind this is a red flag, and there are simple ways to address this, so you can rest easy about the impact of your loan on your credit score. Yesterday, you calculated your EMI to income ratio. If this ratio is higher than 40%, then you have 4 options in front of you. Today's task is to select the option that is best suited to your financial strategy and execute it. Option 1. Explore any untapped tax opportunities you might have missed. Both the interest component and the principal component of your EMI may be eligible for tax deductions that you are not fully utilizing. That means each month your income could be higher than it is. Option 2. Increase your income. Yes, if this were easy, you would have done this already. But many of our clients actively boost their income once they see the pressing necessity given their high EMI to income ratio. Some actively look for new jobs or ask for salary raises. Others invest more actively to secure income from other sources. And yet others simply reduce their monthly budgets. Option 3. Reduce the interest rate on your loan. When market interest rates drop or banks offer attractive offers, the interest rate on your loan might be higher than what you might be able to get. A loan health checkup with a service like mymoneykarma will confirm this in a single phone call. Option 4. Increase the tenure of your loan. The other way to reduce your monthly payments is to increase the tenure of your loan. Do take this option with due caution. These are 4 immediate options from which you can choose your most relevant tactic. But if you'd like a bonus option number 5, join us tomorrow on day 25 of My Money Karma's 30-day challenge to master your credit. Yesterday you learned 4 ways to bring your EMI in line with your income, such that your EMI to income ratio is between 35 to 45%. Today we give you a bonus 5th option. A very powerful way not only for you to reduce your EMIs, but also make them so efficient you won't have to worry about missing a payment. This is called debt consolidation. If you are saddled with various kinds of debt, then this loan will consolidate all of them into a single new debt and pay them off. This leaves you with only one EMI, since consolidated loans are paid back with higher adherence than individual debts. Your creditors are also willing to bundle your debts into one single financing solution, often with lower interest rates. This gives you the opportunity to negotiate anew the terms of your loan and bring it in line with your current financial situation, which may not reflect what it was when you had initially taken out your lines of credit. You're quickly becoming a credit expert. The last few days, you have taken important steps to make sure that your EMIs are manageable and controllable. Today, we'll manage and control them. Did you know that you can set up a simple automated EMI payment on your loan using your credit card or bank account? Check with your lender now about the auto debit feature. But make sure you keep an eye out for confirmation of debits, because based on your lender and the latest RBI guidelines, this feature might require a pre-debit message and a confirmation OTP sent to your registered mobile number. So set these up now and relax. Once you set up the systems to pay your EMIs on time, each payment is strengthening your credit history and increasing your score. Most people see their credit score as a burden, weighing them down. The point of this 30-day series is to build a set of sustainable financial habits that turns your relationship with credit from a burden to a superpower. Of course, with great power comes great responsibility. So the tasks we have focused on thus far were aimed at building a solid foundation of responsible credit management. If you followed all these tasks, then you're ready to start exploring how you can use credit more powerfully through intelligently using your credit mix to your advantage. The credit mix is the different sorts of credit lines and accounts you have. It tells future lenders and credit bureaus that you have the expertise, knowledge, and experience handling different kinds of credit, ranging from credit cards to student loans to home loans or car loans. Especially now that you successfully managed to automate your EMIs and consolidate your loans, you are in a good position to inquire into the different credit options you might extend your portfolio into. This is particularly useful when your credit history is sparse. You're almost at the end of your journey to master your credit. Did you know there are 4 different credit information companies approved by the RBI? Equifax, CRIF Highmark, Experian, and TransUnion Civil. Each of these bureaus follow a different computational logic and therefore arrive at different credit scores for the same person. Generally, the differences are marginal, and users are eligible for a free score from each of these bureaus each year. So today's task is to make full use of this facility. You've already got your free report from Equifax through My Money Karma. Now avail of your free report from the other bureaus to compare and contrast your score. See if you can find differences in your credit history and recent activity. The differences in score will also tell you something about the area of your finances that are more or less important for a given rating agency. This will come in handy when you're looking to improve your score within a short period of time or actively looking for a loan. You're almost at the end of your journey to master your credit. If you've completed all of the 28 tasks so far, you should already be seeing an uptick in your credit history. Check your credit now and see if there's been an improvement in your score. Go through the details of your report to see which parts are reflecting the changes you've made as part of the task this month. This will not only help you ascertain what's working, but also give you an idea of how quickly your credit can react to certain important factors. These are the ones to focus on as you try and build your credit over the next few months. If your score has not gone up, there is nothing to worry about. Remember that the credit bureaus pull your score once a month, usually based on your billing cycles. So you might need to wait for a complete cycle for your actions to get picked up by the latest report, and therefore start reflecting on your score. Either way, you have taken powerful steps towards mastering your credit, and you can watch your score react over the next few months of patient and diligent follow-up. You're almost at the very end of the journey to master your credit. You've come a long way over the last 29 days of this challenge, and if you've ticked all of the tasks so far, you're already within the top 1% of people in terms of credit knowledge and practical experience. Today, let's use this knowledge to spread the word. If you have friends and family who don't have a credit score or don't understand how it works, take 5 minutes out of your day today to help them navigate towards signing up for a free credit check. Most good habits in the world of personal finance today are still primarily driven by word of mouth and through discussions with friends and family. We all know someone who is the go-to person for sound financial advice. And when it comes to the world of credit, you happen to be that person in your varied circles of relationships. A great place to start, of course, is your immediate family, your parents or your spouse. Ensuring their credit is high will also have a big influence on your own financial life, especially because you are likely to get much better terms on big ticket items like a home loan if you have a co-applicant with excellent credit. Congratulations! You've made it through My Money Karma's 30-day challenge to master your credit. You are now armed with the tips, tools and knowledge it takes to confidently manage your credit and handle your personal finances like an expert. Congratulations on successfully completing My Money Karma's 30-day challenge to master your credit. Today we have a bonus 31st day, and your task is to recognize the great steps you've taken from where you started on day 1. Over the last 30 days, you've attacked a large range of concepts and actions. You've learned the sort of nuances about your credit that even many financial experts don't have the time to take full advantage of. You've regularized your spending patterns, analyzed your billing cycles, and synchronized your payment schedules such that your monthly financial life can operate like clockwork, steadily building your credit without any worries. To close off your final task, please share this challenge with anyone you think might benefit from clearly defined steps to understanding and increasing their credit score. Credit history is the most ignored part of one's personal finance strategy, even though it plays such a disproportionate role. This is mostly because credit history is about small, simple, repeated action instead of big one-time hacks. This is exactly what the My Money Karma 30-day challenge is designed to achieve. So share your discovery. Send a friend or family member a link to this playlist and help them master their credit in just 30 days.